What's up, guys? What's going on? We ready to roll or what? Hit a little midday session here. We've got bar 37 closing up here in 3.5 minutes. And my man, we've got work to do. So let's see what we can get done here today. All right. So this here, if we can get this closing up, would be the first 3 consecutive bear body sequence of the day. Coming right into that 20 EMA, yeah. Preferably, I would love to see us get a close beneath the wick low at 28, but the sequence is a little bit small to get that done within reason without 37 becoming more of an outsized bar. So let's see how it closes up. The only way I'd really be looking to get short here is if bar 37 here could close us up probably beneath about 490-ish, just to put a number on it. Not that I typically would. But you know, I gotta tell you, I anything from there, and I'm kind of looking more so for any reason to get long. Very similar action to yesterday, by the way. We'll see if we get a similar kind of midday pullback as we had yesterday. Sort of around this time, right? Maybe a little bit later. All right. There you go, bears. Jeez, look at this. Okay. Minute 45 out. Range on this bar about 53 points. ATR maybe 34, 35. Well, 33-ish. Goodness. Goodness! Look at this! Oh my god. Oh my god. News? I don't know. That's something else. That bar just got outsized, huh? Anyone sitting long? I apologize to your accounts if you are. All right, 37 here. We'll see how this guy closes up, and then I guess we'll watch 38, huh? All right, rolling over here 5 seconds. There's a close at 37. Let's watch 38. If 38 wants to close just beneath the wick low of 37, then bears, I've got a little present for you. Question, did you take any trades earlier before the start of the live stream? I've taken nothing during New York, but I took trades during the overnight session. So I'm starting with a P&L of 46.93 on the dot. But again, I prefer not to focus on that. We'll just look at what I'm doing here on stream. Well, bulls, man, trying to bounce this right away. Again, this is really kind of an any reason to get long market, but bar 37 is trying to change that. I tell you, after 35, 36, 37, I'm looking at this, and I'm thinking, do we just end up seeing a big wide range? Now, it would be wide. It'd be maybe 110 points, which is better than the alternative of a tight 15-point range, right? But a range nonetheless. We've got a minute 35 out from the close of our 38. Let's watch how 38 closes up, and then if it does close up as a nice clean bull body, I gotta watch 39. See what that brings. Nathan says, I've been grinding for 3 months with futures all day, every day. Taking 3 payouts from TakeProfitTrader the last 3 days, averaging 2K a day. Just keep putting in the reps. One good trade at a time. That's it. Take one good trade at a time. Someday you'll look back and say, man, 2K a day. Remember I was pumped on 2K a day? Fuck 2K. Let's do 20. I tell you, that's crazy. For a 3-month grind, which is not, that long of a grind, all things considered, for trade, that's tremendous. I mean, I think $2,000 a day, relatively consistently, for most people, would change their lives. I mean, even if you only do that half of days, we're talking maybe 20K months, which, I mean, yeah, for most Americans would be life-changing. At least greatly take the pressure off, right? All right, about 3 minutes out here from the close of bar 39. And the bears are just trying to turn this guy into a single bar sideways range here. Between 37, 38, and 39. What time frame are we looking at? This is a 5-minute chart here on NQ. Nathan says, thank you, Nico. Without you and Ram, I'm not sure I would be here. Man, when you're averaging 2K a day and you make $3,500 a week at your job, I mean, Jesus, come on now. Can we give Nathan a hand? Come on, guys. In 3 months, dude. Ridiculous. Now, all I would say is, you know, the market environments change. So again, just keep showing up each day, one good trade at a time, let the market environment switch up, do your best to continue to perform at a relatively high level, and then eventually, when you cycle through the market environments, at least a few of them, your confidence level will only continue to improve. The one mistake, though, that I've seen people make, just as a heads up, not to rain on anyone's parade, of course. Not at all what I'm trying to do. I'm the last guy. But just something to chew on for all you guys. One mistake that I've seen some people do is they kind of jump the gun a little bit. They make money for a few days or a week or 2 weeks or a month in a really nice market environment. And then they go full time and then the market shifts to more like a range-bound market. And they're like, fuck, I'm not making any money anymore. So you just want to see that market environment shift and make sure you're able to pull in a reasonable income. And then you should feel quite comfortable going full time. And by the way, the younger you are, the more aggressive you should be with this. And the less responsibility you have, the more aggressive you should be, meaning the quicker you should go full time. In my opinion. All right, bar 44 minutes out here. Still hanging out inside the entirety of bar 37. line on chart, that is a 20 EMA. Do not overblow the importance of it. I barely refer to it. It's literally on there so we don't get dizzy. Looks pretty. At this point, I should probably just remove it, but it's kind of a running joke. All right, 2 minutes, 15 seconds out, watching 40. 39 is a very small bear body. So I would consider 40, but it better be clean for me to consider it. Mario, good morning, big dog. How we doing? Deals, what's up, brother? How are we? Okay, 60 seconds out here from the close of bar 40. Look at this. You've got 35, 36, 37. 37 wicks back, closes closer to the midpoint than not. Now we have 38, 39, small bear body. Decreases the quality of the setup. And now if 40 can give me a nice clean bull close above the wick high of 39, even with the risk of this being a potential trading range, I still would have to get long 30 seconds from now. So let's see if bar 40 here can do just that. Pop a bit, give me a nice reasonably clean, meaning not a ridiculous wick up top, close above the wick high of 39. 12 seconds, I'll get my copy trader engaged, just in case here. Gonna be a whole bunch of nothing here on bar 40. All right, wait on 41, see what we get. Come on, 41, do it to him. You get 39 and 40. This is one of those situations that, you know, I always look at, and it always comes down to the nuance of the particular time that or the particular setup we're looking at. You know, when you get the potential for kind of like a B quality RAM setup, 38, 39, 40, if 40 were to close up here, that would be A, B quality, small RAM continuation, more scalp than anything really, in a bigger potential trading range, right? And then 40 closes inside, so you don't get it. Then you have multiple options, because you could still look at it as 38, 39, 40, 41, or you could look at it as 40, then 41. ultimately what I need a reasonably convincing close out of 41. If 41 goes and closes right at the wick high of 40, I can't get long on that because we're still looking at a trading range inside the, bar 37. All that to say, 2 minutes, 40 seconds out until we get our moment of truth here on bar 41. Hey Ed, how we doing? I'm watching NQ futures. This is a 5-minute NQ chart. All right, 45 seconds here. We've got bar 41 trying to close a bit lower, still in that range. Still in that range. Now, if the bears want to take a breather here, close this guy down here, and then take bar 42 and close it right about here, it gets a little tough because it's like, well, what if this whole thing just turns into a range? But I would still have to short it just because this is all wick. Yeah, whichever way the chart, look, I don't care which direction we want to go at this point. Next setup, I hit. Whether it's long or short. All right, there's the rollover into bar 42. You see this, man? 42 now trying to creep back inside bar 41. Single bar sideways trading range is what this is. Okay, now, when you get this push, right? Kind of a lower volatility, we'll call it. Yeah. I don't know, moderate maybe volatility. Bull trend move for a couple hours. And then you get the 3 consecutive bear bodies for the first time all day, which then turns into a sideways range. Don't overthink how you draw, just fucking split the difference. Draw it how you think 100,000 people might average it. What does the probability of direction of breakout now become? Whether we break short or go back higher. For the actual break, not the false breaks. There you go, Stu. Stu is the only one who knows the answer, I guess, or has the guts to take a stab publicly. 50-50. It becomes 50-50 once the longer it ranges, which it's now doing. Now, if you were to ask me on bar 36, of course, quite a bit higher probability that we push back higher, but eventually that test has to fail, right? You can't just have the trend or, you know, maybe soft bull channel just continue forever. It eventually has to hit one of the lower probability events, which is breaking downside and then into a trading range, or just continuing lower, which is lower probability than trading range first. Which is another thing, by the way. This helped me a lot. When you get a big trend move like this, can anyone tell me? Eventually it has to end, right? Is it more likely that it ranges before it makes its down move? If it makes a down move, it might just range and go higher, right? But is it more likely that it ranges sideways before anything, or that you get an A-frame-like tank? Which one's more probable? Will happen more times out of 100. Exactly. News, Cheryl, Roman, Johnny, Michael, yes sir. It's more likely to range sideways for a little while until you get the next move, whether it's down or continuation higher, especially down. You know, what I mean is it's more likely that it's going to range before pulling in than seeing the A-frame like tank. Same thing after a bear trend. Is it more likely to see that V-shaped recovery or a trading range sideways for a little while first and then kind of a U-shaped recovery? More like that. That's more likely, I'll say. Depends on who's president. All right, we got bar 43, trying to make a move now lower. I'd be okay shorting on the wick of 37. I just want to make sure I'm not doing so inside these bodies. About 2 minutes out, by the way. Johnny says, I'm going to try a long based on the jump of 37. Okay, so you're betting on the range. That's fine to do as long as you have your risk managed in a logical way that makes sense mathematically. Based on your estimation of the probability, right? All right, 60 seconds out here from the close of bar 43. Okay, about to roll over 43 into bar 44. You see this? Inside the wick low of 38. Still a bit too much of a risk of a trading range there for me to short it, obviously. So I'll wait on 44 here and see. If 44 gives me a nice clean bear close, obviously it's got to be reasonable. Then I've got something I got to do. Oh, you beautiful bears. All right. 3.5 minutes left. It's a lot of time. Let's see if these bears can do it to them. Nope, it'll be very obvious when I'm in a trade. Two minutes. ATR, by the way, sitting 33. It's a bit healthier than yesterday. A bit healthier on the ATR. This is a very good test, by the way, on bar 44, because you see the bulls are trying to suck it back into the range. Bear is putting up a fight. Hey, by the way, man, if you have not hit like yet on the live stream, I appreciate you doing so. Or don't, man. If you want to be stingy with it, that's okay too. For those of you who choose to go out of your way, man, we appreciate it. Come on, 44! Give me a nice low close! That trading range, man, these bulls, they don't want to let it go. Oh, you bears. All right. I'll be right back. I just gotta grab coffee to sit through this, man. Give me 1 second. Will not be long. All right. Bar 45. Gaines, big dog. It's good to have you too, brother. All right, 90 seconds out here from the close up here of bar 45. And I don't like bar 44. I'll tell you that much. We'll watch 45. A nice clean close out of 45 puts us pretty damn close to the wick low of 37. By the way, if you're very confused, because we've got a bunch of new people here this week, if you're very confused when I call out numbers, which is understandable, you see my 5-minute NQ chart? Every odd bar is numbered. This is very simple. Ready? I just number them from the beginning, the open of the New York session. That's it. That's it. Doesn't it make it easier? It makes it so much easier than saying times and having to adjust for, 15 time zones. Okay. We are 30 seconds out. I gotta wait on 46. All right, let's watch 46. Still, there's just a tad too much risk of that just being a trading range. So 46, prove me wrong and I'll short you. Give me a nice clean bear close beneath the wick low of 37 and I'll hit it. All right, Karzan, we'll see you soon. How are we doing today, by the way? In the chat, man, how are you doing? Which, by the way, doesn't just mean trading. How are we doing, man? Don't let your mood be defined by whether or not you're green, red, or break even. Obviously, as long as you do your job, because you got to make money. You got to make a lot of money to survive in this world, right? Especially excel, live the life that you want and deserve. But at the same time, if you come in and you do your job, which is make logical decisions with the goal of maintaining your edge, and the chips just so happen to fall against you that day, because the sample size was smaller or just, didn't work that day, that's okay. That doesn't mean mid and long term you're not making money if you have that edge, right? And if you fall into that trap of letting your mood be defined by what your performance did that day, you're going to have a miserable life, even if you make a lot of money. I'll tell you that much. All right, we're about 2 minutes out. Come on, 46. Give me a nice clean bear close. 90 seconds out, below the wick low of 37. What's your split? I've done a bunch of things over the years. Typically, I go back to a traditional bro split. But if you find yourself working a lot, or you can't really recover as well from a bro split because you're training each body part a little harder and too frequently, which was actually a problem for me. My first few years I trained, because I didn't have much going on. Like when you're 18, 17, you don't have too much going on. So, at least comparatively speaking, I was training long and I was training often and I was training each body part often and probably too many sets. And I grew like crazy, but I didn't grow as fast. I really started to grow more when I pulled back. And clearly, in hindsight, I wasn't fully recovering. Which, if you're going to be a professional bodybuilder, you have no excuse. You eat more food and you sleep more, right? You can recover. You're just, if you're under-recovered, you're not eating enough, you're not sleeping enough. But if you're not that, then we have real life. And, do I really want to live like a baby for 15 to 20 years where all you do is eat, sleep, and train? No, not really. So, if you're working a lot and you're like, fuck, dude, I don't have time for a bro split, or I'm not recovering from it, I don't have time to get 8 meals a day in, then train push-pull legs and train maybe 3 or 4 days a week, okay? And just make sure you're getting in enough food. And you'll do well, because you'll be doing less sets per week per body part, but those sets have to be fucking intense, otherwise you're wasting your time. But, on the averages, I traditionally go back to more of a bro split. Which, if you don't know what that is going to be chest, back, shoulders, arms, legs. You want to bring the legs up, you throw another leg day in between back and shoulders. But that's also very time consuming, right? Not necessarily in the gym, but the eating. The training doesn't take all that long. It's fucking hot. All right, 355 out. Big E says, I love leg days. My biceps get a great pump on those days. Yep, we got leg day today. So we'll be doing 12 to 15 sets of tricep extensions. And maybe 6 to 8 sets of bicep curls. Fucking brutal leg day. Come on, 47. Two minutes! Tag 47, let's go. Come on now. Now this is starting to look, right, if you just look from bar like 39, well, really bar like 37, I guess you'd say. It starts looking like a bear wedge or even a soft bear channel if you cut the wick off 37. The problem is it's not yet, it's still a trading range. Question here, Tubed Out says, Nico, I went short on bar 36 for a nice 40-point gain. Does that qualify as RAM? I used my own setup, though. So here's the thing with 36. If you're looking at this like a bull trend or even later on from bar like 21 onward as a soft bull channel, 36 is what? Contextually, still technically at that time, kind of an any reason to get long type setup. Now 35 being a bigger bear body, you might hold off on 36 and wait to see 37, then you get that, right? But if you had to do anything on 36, if you're going to get short on 36, I would love to see you have, because the probability on it, even though people are like, yeah, but look at what happened. Think of 100 times, not one, okay? 100 times if you get 36, does 37 happen more often than not? Of course not. Of course not. Right, there was some news involved and all that. But if you're going to short 36, being that we know probability is not tremendous, what do you have to have if you're going to short 36? Can anybody in the chat tell me? If you can tell me in the chat, you've got a hell of a fucking chance of going full time here. Take a stab, man. Roman, attaboy. Christian, not wrong. Flavio. That's right, Edge. You have to, if the probability is not great, you have to make up for it by having a pretty big reward to risk. Good stabs in here, guys. What I was looking for was a bigger reward to risk to make up for the poor probability. That's that math equation, right? It's a spectrum. You can actually, I'm talking to my Tomb guys about this all the time because it's actually a very interesting reality of trading is as you get more and more advanced, you'll start to realize you can kind of modify your experience. And that sounds crazy, but you can customize the experience you have at the charts. If you hate losing often, but you don't mind that every once in a while you take a big loser, but you just fucking hate losing and you want to win as often as possible, even if it's small wins and bigger losses, well, then you should go negative reward to risk scalping with a high probability and try to make the numbers work that way, right? But if you spiral after a big loss, you don't mind losing, but they better be small when you take them, then you should probably go for bigger reward to risk trades with a lower probability of success. So you'll lose more often than you win, but when you win, they're big. And when you lose, they're small. And everywhere in between. Assess your personality type on a career level, and then you can also make changes a particular week based on the market environment. If it's more range, you guys see I'm taking more scalps, typically. Because I can't make some massive ask out of the market. It's a range. So, it's actually kind of interesting because people say don't make adjustments when you're losing, and I agree, don't adjust outside of what has historically been your edge, but I would make the argument that if you're in a dark place and you're not enjoying your job, that's not good. Right? Your job as a trader, right? Like that's not a positive thing. And if it's being driven by you've been taking some big reward to risk swings, which have a high probability of losing, so you've lost a lot, and it's really upsetting you, and you're like, you know what? I just need a higher probability here because my confidence is in the tubes. And if I do take a loss and it's bigger, I don't really care. I need W's psychologically. Then lean into scalping for a week, especially if it's a range market. Scalp. Scalp, scalp, scalp. Negative reward to risk. You're going to have bigger losers when they come, but you have a higher probability of making the trade work. You still have to have positive expected value, by the way. You still have to make logical decisions. You can't just do random things because it has a higher probability because you're negative reward to risk. Right? But you can customize your experience. So if you need that, don't use it as a crutch to fix your emotions that are brought on by you not having edge. But from a career perspective, you can make these adjustments to get yourself back in the game when needed or if needed at all. All right, now 49 is going to be an important bar because we'll see if this ends up popping back up into the sideways range, or if we reject, it starts looking more and more to me like a bear wedge, or even maybe a soft bear channel. Let me get a gauge here, by the way, in the chat, and don't be shy. If someone wants to try to bully you like a fucking loser, then they'll get banned. Just be honest in the chat. When I say these things, because I need feedback. I don't know what's going on in your head. When I say these things, when I talk about the equations and the math and customizing your experience, is this landing? Do you guys have any fucking clue what I'm talking about? Or half you guys like I have no idea what he's saying, but I'm not going to say anything because I don't want someone to talk shit. Just be honest, dude. I mean, straight up. Okay, good. Good. Yeah, I mean, look, I can always explain things a little more simply. It's tough though. It's not, you know, it's a simple concept, but it's not the most, I mean, day trading is not the most simple thing in the world. But I also believe in kind of forcing you up. Like I'll talk until you are kind of forced to revisit things and put the pieces together and ask questions. Like that's what's always worked for me. Like, I've always felt if I'm trying to learn something from somebody, do not handle me with baby hands and give me some bullshit because you don't think I'll understand what it really is. Tell me what it really is, and then I'll ask. If I don't understand 90% of it, just tell me the truth, and then I'll ask you. All right, 2.5 minutes out here from the close of bar 49. Good, good. I'm glad that we're kind of picking that up, man. All right, now, even if 49 closes nice and clean, we've got a problem here. As much as I wish we didn't have a problem, we do. And that problem is a trading range. This would be closing right in the upper third, maybe even the upper quarter of that trading range. Which, you know, contextually speaking, I have to look at that as a trading range. I can't. I mean, what am I going to do, you know? Look at this as a big soft bull channel? Come on, that's a trading range. It's not a soft bull channel until the bulls take it and take out the wick high of 34. And even then, it's not really a soft bull channel until this is proven not to be a range. Right? So we've got issues here on 49, but patience. And when it comes, I'll throw it on. Cheryl says, I like what you said about scalping. That resonated with me. Yeah. You know, hey, tool in the toolbox, right? When you need it, you whip it out. $48, $49, doji. Market doesn't know what to do. If the market doesn't know what's going on, if the market's confused, why the hell would I not be? Is what I always say. So big bar 50, come save the day for us, man. I need something logical to take. So right now the market's confused if this is a bear wedge or just a big trading range. And you can tell because 48 and 49 both have no fucking idea what to do. Bad Joe says, Nico, I appreciate that you actually practice what you preach. You've moved back and forth from smaller scalps to longer swing trades depending on conditions. Yeah, 100%. Good for us to be able to see that. Look, guys, everything I say, this isn't theory. I went through the trenches, dude. The market hurt me a lot to the point where the fucking market can never hurt me again. I'm good. Like, now I'm in the driver's seat, which is a beautiful thing. But the market hurt me a number of times. Okay, so everything that I say, I will not say something unless it's what worked for me. Or unless it was my experience. That's the only place I'm speaking from. There is no theory. There's just what didn't work for me, what really fucked me up, and what actually improved me, my trading, or my psychology, etc. How long have you been trading? About 9 years. How long did it take you to start making money? I was rolling over into my 3rd year when I was finally at a point where I was basically paying everything. Well, actually, I was paying everything from trading. But the expenses were lower back then, of course. So, But hey, just because you have low expenses doesn't mean it's not, you know, full time. And I wasn't getting help from anywhere. We were living on our own, paying for everything ourselves. Well, bar 50, while it has some lore around here, that was an embarrassing bar 50. 48, 49, 50, this market is so lost. So I wait. Trading Chris, what's up, big dog? He says, like a year ago, I watched Nico's How to Make Your First 10,000 vid. Now I have 300 live trades logged, positive expected value, and will be quitting my job soon. Pretty life-changing. We love it, big dog. You know what the nice thing about that video is? There's no bullshit. It's just math. Which is why I made it. You'd think, wow, that sounds like a nice clickbaity title. No clickbait in sight. It's just math. Question, were you doing any stupid trades in your journey? Was I doing any stupid trades in my journey? Was I doing any logical trades early in my journey? Should be the real question. Of course, they were all stupid trades. Early in your career, everybody's a contrarian. Right? So when the market's trending, you think, ha, what am I gonna do? Buy at the high? Nope, I'm gonna short it. And then you get run the fuck over and lose everything for the second time, is what I did. So I hope Morgan Stanley enjoyed my life savings back then a couple of different times. Because now it's my turn. Big dog. Bar 51. Let's see, 245 out. Oops. There we go. Two minutes out here from the close up of bar 51. Okay, so after 48, 49, and 50, 51 is still inside that bigger trend range, right? So I gotta wait for 52. Well, I guess depending how this closes up, we got a minute 20 out. Question, so no more contrarian? That's not what I mean, because I'll take limit order reversion scalps all the time. What I mean is, if the market's in a big bull trend, probability-wise, the most extreme that it'll get is about 70-30 in the direction of a nice strong trend, okay? And these days, I prefer not to step in front of that train until I get an actual counter argument, which is typically going to be 2, more like 3 consecutive bodies in the opposite direction that close beneath, in the case of a bull trend, we'll say, a really clear curl that was a part, or wick low that was a part of the previous trend. I know that sounds kind of confusing, maybe, but you stick around long enough, I think you'll see plenty of examples. Mario says, copy trader engaged? Unfortunately not, my man. I wish. But look at this problem. We've got an issue, don't we? Which means I'm waiting on bar 52. We've got a context issue for 51, not to mention 48, 49, 50. That breaks the setup right up, doesn't it? That's 15 minutes of sideways action. It's a lot different than 5. Alright, 243 out here, bar 52. I'm all 52. Get the job done. It's tough, because I'd really need to see it close above the Wikaya bar 40. And ideally not, like, by 2 ticks, right? Because then it's trade range action. The higher it goes, the more risk of it being outsized. Bar 52 has. So what do? Well, we sit and wait and see how it closes up. That's all we can do. Panda, how we doing? All right, Dragon, we'll see you, big man. Andre, how we doing? Sorry if I messed up your name. I can't really read it. All right, 52. Is Chinese food good in the US? Every town in this country has 3 ma pa shops that are fucking monsters. Oh yeah, it's good in the US. We love it. What's up, SK? Good to have you. Trading Chris says, if your models have different expected value, this is a high level question, so stay with me. If your models have different expected value, say some higher than others, does it make sense to dynamically risk? For example, more on higher EV, less on lower EV, or is that a tad too much in the beginning? Brief answer, it's a tad too much in the beginning. Real answer, this is called exponential bet sizing. It's what the top poker players are very good at doing. This is their best skill, sizing their bets based on their expected value. And yeah, if you've been trading for a while and you're trading in a personal account and you see a setup that you might see 3 times a year and it's an A++, do you risk more money on it, assuming you can handle the drawdown if it happens to be a loser? Yes. Yes. And the most extreme exponential bet sizers might go 20x the risk, because there's a lot of EV there. You got to pull it out. Now, here's the issue. If you're newer, you psychologically can't, A, handle if it's a loser, just straight up. That's not a dig. It's not going to be good. Second, you don't know what A++ looks like, big dog. Not a dig on you. You just haven't been around long enough. That's okay. It's the case for everybody early on, right? Number 2 or 3, whatever the fuck number we're on. If you're trading prop, I don't think there's too much of a spot for it, unless you're going to maybe, take double the size. But true exponential bet sizing requires a lot more risk, because there's a lot more EV, expected value, edge. And the problem with prop is you don't have that much room. Right? So with prop trading, it's quite a bit different. All right, so this trading range is being respected, as you can see. Bar 51 comes right into 52 at the top third of that range. And bar 53, now bears are like, yeah, we're going to fade this thing right back into the range, as expected. Now you might say, well, isn't it logical to take a short then on the close of 52? Yeah, it's logical. But is there good enough expected value on it to put it on? The risk is tough. The logical aspect is not the problem in sideways trading ranges. Of course it's logical. Buy low, sell high, buy back lower. The problem is managing your risk gets weird and arbitrary and tough. Because with trading ranges, you'll see all the time an attempted break above 40 and then it just fades right back in. Well, where are you going to put your stop? Above 40? Okay, you'll fall victim to that like at least half the time. And then, 36, maybe. You could use high a day, but now your reward to risk is getting kind of out of whack compared to the probability, maybe. Though if you were going to short here on 52, I think the best way to do it would be to size down, because it's a range trade, so the edge is going to be smaller than a good continuation trade in a trend, right? Size down, risk the high of day, and take it as we pull into the lower third of the channel. That's how I think that would make the most sense, in that case. Would somebody hand Trump his iPhone, dude? Come on now, ATR down into the 20s, 27. Yeah, that's bottom right of your screen. That number in red, 27.28. That's the average range here of a 5-minute NQ bar in terms of points. Below 30, things are starting to get a little bit lower volatility. Question! Nico, what's your favorite takeout or dining experience? Oh, geez, you would recommend for a visit to the U.S. Context! There's so many. The one that instantly comes to mind is, for all you guys, one of my favorites. Now, there's a huge difference between, like, takeout and dining in, so to speak. Like, are we talking, like, just food that throws down and it's like you get it delivered and it's sloppy and it's Chinese food or whatever and it just hits? Or are we talking like a little nicer, like you put on a dress shirt maybe, and you go sit down? If we're talking about that, one of my favorites, if you're ever in Chicago, by the way, Chicago in the winter, I love it, but Chicago in the summer is undefeated. If you're ever in Chicago in the summertime, June, July, August, it's going to be expensive, sort of. Go to Smith & Walensky's and sit outside and order what you want. Don't try to save money. Just get what you want. Sit outside on the river. It's beautiful, man. One of the best. All right, here. 3 minutes, 12 seconds out. Two minutes, 25 seconds out here. We're coming right into the bottom of the range. Oh, you're killing me. Bears, bulls, somebody get us out of this. ATR 29. All right, coming right into the low of this range. Let's see what bar 54 has got. Man, a 55 can roll over and give me a short. Give me something to do. 70 seconds out till the close here of 54. 15 seconds, Sal. You see this? Bulls wicking it right back into the middle of the range as if we didn't expect it. Oh, man. ATR still holding on to 30. That's the positive thing here. All right, let's watch here. Let's watch how 55 ends up. Again, I'm looking for any reasonable RAM setup closing outside of this trading range. I'm less likely to take the first bar if it closes very close. Ooh, did we just get news? A little something? That was a little volatility pop, huh? That little pop back upside? I don't know. 4 minutes out here. Oh, yeah. Oh, yeah. We've got some comments coming in. Halfway through 55, whole bunch of nothing, man. This range makes me wonder, man, since bar 37, how many people have blown up accounts? Not necessarily just here, I mean across the industry, because this range, man, if you get caught trying to bet on the breakout in a trading range, 80% of breakout attempts approximately will eventually fail. $90 seconds out. All right, 30 seconds here. Let's see if 55 is able to give us a close outside of this range. It's not looking probable here, unless we get a comment from Trump in the next 20 seconds. Inside close. Inside close. All right, let's watch 56. Bulls hanging out of that trading range. All right, give me 2 minutes. Be right back. Oh, baby, look at this. Look at this. 18 seconds out. I got to go ahead and get that copy trader engaged. Bar 56. Range is barely within reason on this bar. Get my stop limit sell ready to go here. Ooh, it's a bit of a wick. It's a bit of a wick. I'm going to give that continuation trade about 20 to 25 seconds. And if the bears want to take it, then I'll get involved. If they don't want it, I don't want them. Let's see. Got to get ready to cancel if they don't want to take it. 3 seconds. No fill, no trade. I got to pull it. I got to pull it. That's the rule. All right. Here we are now watching 57. Let's see. 425 out. Come on, Bears. Give me an even better bar than 56. Someone says he takes trades live? Question mark? What do you think we're doing here, man? Of course. A bit slow here today. Midday session. All right, 335 out. Minutes here. 3 minutes. Let's see if 57 can give me a nice clean bear close. Very little wick. Even a bit more reasonable compared to the ATR, which is currently sitting at 33 after bar 56. Bulls, don't you dare take us right back up to that trading range. Don't you do it, Bulls. Alright, we're about 1:35 out here. Bear's trying to roll this bar over into a bear body. Come on now. Do it to him. Give me a nice little setup. $55 seconds. Bears, go on now. Oh man, these bulls. They are putting up a fight. Now, the beauty of this is that after bar 56, again, that ATR, we're back in the 30s, man. 33, 34. We can work with 33, 34. All right, here we go. 10 seconds till the rollover. So this is going to be a small bull body closing inside, of course, bar 56. And here's 58. See what we get out of 58. Use a 5-minute chart only. The 5-minute chart is kind of my home. But no, only? No. No. I mean, whatever. Give me a 2-minute, give me a 3-minute, give me a 15-minute, a 10-minute. Give me a 7-minute chart. I don't care. I just really like the balance of a 5 minutes, so most of my time, on average, is going to be spent on the 5. You see 56, closing with a bit of a wick, right? First bar to close meaningfully outside of that trading range. Worth putting on if the bears want to take it quickly. Now, the reason I say 20 to 25 seconds is because I'm typically, on a 5-minute chart, I'm sitting between 15 and 30 seconds. In A setup, I'm going to give it 30 seconds because even if it takes its time, it's still an A setup, right? But A minus, B plus, I start dipping down. B minus, I start dipping down to more like 15 because it's not the greatest setup in the world. So I need them to take it quickly for me to be convinced that it's worth putting on as far as having an edge long term, right? So 56 took, what, 30, 35 seconds to take out the wick low just barely? For the quality, the grade of this setup in my head, that's too long. Now here we are struggling, so let's see if 58 can maybe put something together here. A minute 50 out. Free riders. May I ask what copy trader you use? Sure, here. There you go. There's the link to the exact one that I use every day. I've tested a whole bunch of them. This one's the best. Carzin, my man. These bulls, man. They're putting up a fight. Now we got 57, 58, 59. Same problem we had back here. 39, 40. 48, 49, 50. Not quite that extreme, but... Hey man, if you haven't yet, I appreciate you hitting the like button here on the live stream. Helps out a whole bunch. While we wait for this market to give us something. This is ridiculous. All right, 59, 315 out. Ooh, good question. Nico, do we see a down trend from bar 35 if you draw the line? Trend? No. Potential soft bear channel? Potential. Yeah, potential. But that's only very recent. That's since bar 56 as we took out... Because before bar 56, it was this, right? And it was a range... until then as well, because you really couldn't draw any argument of a bear channel until 56, because then you had 52 helping it, 55, the hesitation on 54, 55, and then 56 went. So, yeah, maybe. Trend? No. Channel? Sure. Could it turn into a trend? 100%. 100%. It looks to me like it's getting a tad more aggressive as time goes on anyway. A tad more, not a lot more. All right, 59. I don't mind 59. I got to tell you that much. Minute 35 out. Now, if I end up shorting 59, that counter argument becomes the soft bear channel, right? All right, Bears. Hold on to that now. We love it. Definitely early for a stop hunt, by the way. ATR only 33. $50 seconds. All right, 32 seconds out. I got to go ahead and get that copy trader engaged. Now, again, I'll repeat, we had a wedge after initially the range, and now as we get this, it's starting to get more aggressive, which gives me enough confidence to spit in the face of the soft bear channel and put on a short if the bears want to take it. Range on this bar is within reason compared to the ATR bottom of your screen, that orange bar versus the red ATR line. All right, let's see if the bears want it. If they want it, then I would like to participate, man, but they better take that within the first 25 to 30 seconds. Come on, Bears. Come on, man. Gobble that order up! No fill, no trade, man. Story of the day. Story of the day here today. There's a bunch of wussies! Alright, let's watch bar 60. Bar 60, if we can get a nice clean bear body here out of 60, then there we go. By the way, guys, Apex is still 90% off. That'll be ending here pretty soon. Yeah, less than a week. Code BIG, B-I-G, 90% off at Apex. And single day pass, of course. Which, by the way, does not mean you have to pass in one day. It just means you can. You can technically pass in one trade, just to be clear. Not that you should. All right, halfway through bar 60 here. Carson says, I used code BIG 3 times this week. Big dog. My man. All right, bar 60. All I need is a nice clean bear close. Bears, I like what you're doing so far. I like what you're doing so far there, Bears. Let's keep that up. I don't like that wick. Don't get insecure on me now. Get that warm, fuzzy feeling when a setup's coming in. And then that sinking feeling when the Bears get insecure! Alright, 27 seconds out, copier engaged. Oh, you Bears. Wicking back. Get down. I need to see a nice clean close. Oh, we don't love that. 10 seconds, I'll get my stop limit cell ready. Tank it, Bears. Do it. Go. Last second adjustment. Oh, that's so ugly. Inside, the wick low of 59. Ugliest bar I've ever seen in my life. Moving on. Moving on to 61 here. Let's see. That bull's trying to pop this thing now. Let them have their fun. That right there is why I can't short a giant wick, tiny bear body inside close, right? be stopped out already. If you risk the wick high of 60, which, you know, if you're trading RAM, you wouldn't have taken it, I mean. See these bulls? Yep, taking it back. All right, bar 61 here, 247 out. I have gotten teased. How many times on stream today have I gotten teased? I think 3, right? Big Boss says, almost blew my eval trading minis instead of micros by mistake. Yep, we've all done it at least once. Put ones in the chat if you've done it. Don't you lie to me. I know you've done it. I accidentally hit the minis instead of the micros. All of a sudden you got, 5 minis on in a 50K. All right, bar 61 here. Nice big bull body, though. 58 seconds. Yes, sir. It is helping out that ATR. We're sitting 35 now here on the ATR. Timothy says, I did that with silver. Wasn't pretty. Yeah, silver's a big boy. I imagine. Please don't tell me we're just going to form a new trading range here. Please don't tell me this is what we're in for. Bulls, if you're going to bounce it, man. Keep that volatility up. We're sitting at 33 here on the ATR. Alright, minute 55 out here from the close of 62. Got that 20 EMA about 15 points away. Question! Just found our channel here yesterday. Does Nico not use any indicators, just candles, price? I trade RAM, which is my take on price actions, so I use price action. That's a 20 EMA, that gold line on the screen. Take it away from me, whatever, it doesn't matter. It's not going to change my decision making, hardly at all. So yep, just price action. I'm a purist. By the way, not for lack of trying with indicators. Early on in my career, I tested indicators, pretty extensively actually, and I was never able to find any meaningful edge by using them for entries. Alright, by the way, here comes the rollover of bar 62, 10 seconds out. Bear is already trying to fade this guy back down. We get a bit of a wick up top here on this smaller bull body. It's going to close closer to its midpoint than not. Alright, 63? What you got for us? 4 minutes out here. Yeah, you know, I know early on in your career, it feels kind of scary to not have indicators on your chart. Let me tell you something. I am scared of having indicators on my chart because it never worked for me as much as I tried. Indicators are middlemen. That's all they are. Price is truth. Go straight to the source. All right, 215 out. You see this? Bears wicking it back inside the wick high bar 62. Bulls even having trouble getting us above the wick high 62. Minute 13 out here. ATR still in the 30s, sitting at 33. That, of course, being propped up, 56, 59, 61. All right, Bulls, what you got here? Let's see. "26 seconds out. I'm going to get that copy trader ready just in case the Bulls decide to get feisty with it and pop and close nice and clean up in this region, well above, obviously, the wick high is 62. In which case, I will use that, which is called a stop limit buy. But not looking too good here, is it? Another inside close out of 63. You see this? Closing inside the wick high of 62. The Bulls are hesitant. They are hesitant. Alright, let's watch 64. See if the Bulls can clean that up. All right. We've got 3 minutes until the close of 64. Question, are we in a bear channel, Nico? Well, yeah, obviously what you're looking at is this. And the answer is maybe. My answer is it's so wide that I kind of struggle to look at it as a traditional bear channel, that I would be looking for limit order reversion scalps in, because it's so wide that the entry area is very subjective, which makes managing risk a little weirder. Right, when it starts getting really, really wide, rather than going limit order reversion, I prefer to find continuation to the best of my ability inside of the range. In either direction, by the way. And I'm more willing to go against the direction of the channel, the softer the channel is. Does that make sense? Obviously, if this was a more aggressive move down, I'd be looking at it more as a potential bear trend, and I'd be less willing to get long, even if I got a continuation trade to the long side, unless it was, 3 beautiful bars closing above a clear wick high curl, right? Oh, these bulls! They can't do it! They're having trouble with the wick high of 63. Alright, guys. Not for a lack of trying, no trade stream here today. It's been a little while. But we had fun, man. We tried to get some work done. I'm gonna go hit lunch. I'll come back. I don't know. We'll see how the last maybe 45 minutes of the day goes here today. But right now, these bulls are having a hell of a time. Bears are also, look at 60. So much, 60, you had so much potential. Wick right back inside the wick low 59. I will see you guys tomorrow. Hit the like button on the way out. Or dislike, big dog. Whatever you gotta do. All right, I'll see you tomorrow. Have a good one.